And Dodge, the RSI value of Dodge as at that point when we checked was 29.8. Okay, 29.8. So first of all, there's a divergence. Okay, there's a divergence. What do I mean by that? Yes, guys, welcome to my channel. Welcome back. Welcome back. If you are an existing subscriber, welcome. You guys are the real MVPs. And if you are new to this channel, we are saying welcome to. Please make sure to smash the subscribe button right now and subscribe to the channel so that moving forward you will receive all notifications regarding videos we are going to be publishing in the future. Do you understand? So smash that subscribe button right now and turn on the notification bell. All right. Now, guys, today we are going to be looking at how to make money with pair trading. How to make money with pair trading. You don't want to miss this, and you can't afford to skip any part. Don't you skip any part of this video. Watch it to the end. If you don't watch it to the end, you won't have a full grasp of all that I will be saying and of all that I will say. Do you understand? So don't skip any part of this video. All right. So now let's make progress. What is pair trading? What is pair trading? Before I begin illustrations, all right, what is pair trading? Well, pair trading is you simply buying one currency and selling the other. In this case, what you are capitalizing on the differences in terms of their positional direction. You know, in Bitcoin, I said Bitcoin, you know, in crypto arbitrage, okay, for example, in crypto arbitrage, you are capitalizing on the price difference, on that little price difference, all right, between a currency on different exchanges. So the price difference on those different exchanges for a particular currency is what you are capitalizing on. That is crypto arbitrage, right? Now for pair trading, all right, under futures, for pair trading, you are simply capitalizing on the differences in terms of their positional direction. I will explain, all right? I will explain, don't worry. Now, let me use illustrations here. So we have a whiteboard, right? We have a whiteboard, and let's say we have something like this. You know, this is uptrend, right? This is uptrend. Okay, that's uptrend. This is uptrend. Okay, uptrend. So the price is going up, right? While this one, follow me. Don't skip any part. Don't skip any part. Be patient. Why this one is downtrend, right? This is downtrend, right? Downtrend. Okay, so when we say long or we say buy, when we say buy BTC / USDT, okay, let me use the word, the technical word long, all right? So when we say in futures now, when we say long BTC / USDT, we are simply saying you should buy BTC because the price the price will soon increase from the entry price we gave you, okay, as a signal. Let's say we gave you an entry price based on signals, all right? So we are saying buy BTC at this price, okay? It will soon increase from that entry price moving forward. It doesn't mean before it increases, okay, before it makes that increase, which is profit, all right, that it won't kind of reverse a little bit or even more before it actually gives you profit. Do you understand? So we are simply saying buy BTC because it will increase in price. That is when we say long. Okay, when we say long BTC, okay, we are simply saying BTC will take an uptrend move. It will make an uptrend move. Do you understand? The price will shoot up. So when we say, on the other hand, when we say short BTC USDT, for example, okay, we are simply saying BTC price will fall. Do you understand? BTC price will fall. So buy BTC at this price, okay, and expect a fall in the price of BTC. So when BTC eventually falls, all right, you will make profit. You will make profit. Do you understand? Because you took a short position. So when we say short BTC, we are simply saying BTC price will fall. Okay? And when we say long BTC, we are simply saying take a long position, meaning buy BTC because BTC price will soon increase. So when we say long, it means uptrend. All right? Okay? There's a potential uptrend. When we say short whatever currency, we are simply saying there is a downward there's a potential downtrend move that is awaiting. Do you understand? So when we say short, we are simply saying there's a potential for a downtrend move. When we say long, we are simply saying there's a potential for an uptrend move. Okay, so long means that currency will soon increase. Short means the price will soon fall. Do you understand? Now, I simply said that to say this. Follow me. So in pair trading, you are looking out for pairs that are positively correlated. Do you understand? You are looking out for pairs that are positively correlated. So let's say when the pairs are about to separate in direction, somebody may ask, okay, when should we enter a trade? Okay, let me use an illustration in this case. Let me show you something. See, let's draw an uptrend. Let's say this is an uptrend, right? Okay, this is another uptrend. Okay, so let's call the first uptrend, let's call it pardon me, let's call this one coin A, and we call this one coin B. Okay, coin A and coin B. Now coin A is moving upwards. Okay, that's an uptrend. Coin B too is moving upwards. That is an uptrend. So both coin A and coin B are maintaining the same direction. Do you understand? And if you can recall back, I said you are simply capitalizing on the differences in terms of their positional direction. Okay, so coin A is making an uptrend, coin B is making an uptrend. So both of them are maintaining the same direction. Do you understand? So in this case, you don't enter a trade. You don't enter a trade in this case. Do you understand? Don't enter a trade in this case. When do you enter a trade? You only enter a trade when the pairs are about to separate in direction. That's when you should enter the trade. Do you understand? Let me show us another illustration. This is same direction, okay? Uptrend. Let's look at another scenario or another case study. All right, guys. So this is a downtrend. This is another downtrend. All right. Pardon me, please. Both of them are downtrend. They are plunging downwards. This is coin A, and this is coin B. All right. Now, coin A and coin B are maintaining the same direction. Coin A and coin B are maintaining the same direction. In this case, there is no opportunity for you to enter the trade. I'm talking about pair trading now. Okay, I'm talking about pair trading. There's no opportunity for you. There's no signal for you to enter the trade. Why? Because both of them are maintaining the same direction. Do you understand? So whether it's an uptrend, whether both of the pairs are maintaining an uptrend or they are maintaining a downtrend, in either of those cases, you don't enter a trade. Do you get the point now? You don't enter a trade. So when do you enter a trade? Like I said before, you enter a trade only when the pairs are about to separate in their direction, or when they have separated. It depends on your time. If you are able to time it. Now, if when I say time it, I mean if you can use trading view, all right, the trading view platform. With that, you will be able to time it like almost 100%, when to know the exact time the pairs you are looking at separates. Do you understand? Now, don't forget, the pairs must be positively correlated. The pairs in question must be positively correlated. Don't worry, I know there are a lot of questions in your mind. Follow me. You will get to see more as we make progress. So let's go. So this is another scenario or another case where coin A is making an uptrend move. This coin A, while coin B is making a downtrend move. While coin B is making a downtrend move. This is coin B. Do you understand? So in a case like this, there is an opportunity for you to carry out pair trading or to implement the pair trading strategy. Do you understand? So you have a perfect opportunity at this point to enter the trade or to enter your trade. Why? Because first, the two pairs you are looking at, one of them is in the upward direction. The other one is in the downward direction. So both of them are separated, right? So you capitalize on the differences in their opposite directions. Do you understand? You capitalize on the differences in their opposite direction. So don't forget, like I said earlier on, I said pair trading is simply you, the trader, buying a currency, let's say currency A, and then at the same time selling currency B. Do you get the point? Don't forget, the key word there is at the same time. At the same time. So simultaneously, you execute both trades. So coin A is in an uptrend, coin B is in a downtrend, or coin B is making an uptrend move while coin A is making a downtrend move. Whichever way, provided both of them are in an opposite direction. Do you understand? So you buy one while you sell the other one. Do you understand? Or you sell the other one while you buy the other. Okay? Now, follow me as we make progress. So at this point, here are things you need to take note of. Here are important details you need to take note of. Number one, you must enter both trades at the same time. Enter both trades at the same time. All right? You must enter both trades at the same time. That's number one, right? Then number two is that you must use market order for both pairs. Use market order for both pairs, or both trades, if you like. Do you understand? Use market order for both pairs or for both trades. Do you understand? These are important details you must hold very tight. Without these details, guys, you will make a shipwreck. I mean, you won't succeed in this very strategy. You won't. So don't think this part is not important. Without this part, you won't succeed in this. Do you understand? So pay very good attention. Don't skip any part, like I said earlier on. So number three, number three as well. Number three is that you must use the same margin mode. And in this case, the margin mode I would recommend you make use of isolated margin for this very pair trading strategy. Do you understand? Use the same margin mode, which is isolated margin. So for the two pairs you are trading, both of them must be isolated margin, not cross margin. Please, it's very important. Do you understand? Isolated margin. So number four, let's go to number four. Number four you need to take note of is you must use the same leverage. Use the same leverage. And I will recommend that you use leverages between one, pardon me, use leverages between 1 to 7. Don't use higher leverage. All right. In fact, your maximum should be 7. But even 7 is kind of risky. I mean, for the purpose of this very strategy, I'm telling you the truth. Even 7 is a bit risky. It's too high. Do you understand? But you can use 2s. You can use 2. You can use 3. You can use 4. You can cap it at 5. Do you understand? But if you decide to go for 6, 7, it's up to you. Do you understand? But I recommend between the ranges of 1 to 7 when it comes to leverage. So you are using. So let's say you are okay with 4x as your leverage. Okay, times 4. All right. You're going to use that leverage of 4 in both pairs, not just in one. Use it for the two pairs. Do you understand? So use the same leverage. Number what? Take number 4, right? No, number 5. Number 5 is you must use the same capital, or if you like, you can say the same amount. Pardon me, the same amount. So let's say you have $100, okay, and you want to just use like $40 for this pair trading. A particular pair you want to use for your pair trading. All right. So you have $100. You want to use only $40. All right. So you allocate $20 to the first pair. You allocate $20 to the first pair. Let's say $20 goes for coin A, while the remaining $20 goes for coin B. All right. So you divide whatever capital you have into half. that is into 50%. Okay, so the capital you have is 40, right? That's 100%, right? So you split it into two, 20 20. Okay, you put 20 for the first pair, you put 20 for the second pair. Don't split it into 60% and 40%. Please don't try it. Don't split it into 70% and 30%. Don't try it. Don't split it into 10% and 90%. No, give the same amount of give the same capital or the same amount to each pair. So if what you have is $100, for example, give $50 to the first pair and $50 to the second pair. And if at all there will be difference in the allocated capitals to each of those pairs, the difference should not be much. Let's say you have $40, all right, as your capital. You can give let's say you can give $21 to per A or coin A, then you give $19 to coin B. Do you understand? Or you can give 20 points, let's say you can give $19.8, all right, which is $19.80. You can give it to coin A, while the remaining 19.2, which is $19.20, goes for the other coin or for the other pair. Do you understand? So whatever capital you have or amount you have, you split it into two. The first half goes to the first pair, the second half goes to the second pair. Do you understand? It must be equal. So you give the same capital to each pair. Do you understand? Now for the sixth point, you have to take note of. We will come to that because we will need to get to Binance, our Binance account, and show you how to go about that. Do you understand? Okay, guys, so the sixth point, let me give us the sixth point before we proceed to Binance. The sixth point, I will give the sixth and the seventh point. The sixth point is that your pair range should not exceed 0.76. Your pair range, this is sixth point. Sixth, your pair range should not exceed 0.76. Your pair range should not exceed 0.76. Now you will ask, what do I mean by that? Don't worry, I will show you what I mean by this when we get to Binance. I will show you exactly what it means or how you get to calculate it. Do you understand? So the seventh point, which happens to be the last point, the seventh point is your time frame. Your time frame. So your time frame should be between 5 minutes time frame, or you can choose 5 minutes time frame, okay, 15 minutes time frame, or the 1 hour time frame. Do you understand? Your time frame should be between 5 minutes time frame, 15 minutes time frame, or 1 hour time frame. Now it depends on you, but you could choose to go for the 1 hour time frame, and I would recommend that you go for the 1 hour time frame. Okay, but even at that, you still have to watch your trade. You have to monitor your trades. Okay, in pair trading, you don't just enter a trade and you go to sleep. No, or you go and do other things or engage yourself in other things. No, you have to be there on your Binance account. You have to watch your Binance account. I mean, you have to watch how the trade is going, so that you know when to close it. All right, so you know when to close it, because there's no particular time to close it. There's no particular time to close it. So you have to watch your trades. You have to watch your trades. Okay, it's very, very important. You have to watch your trades. So let's proceed to Binance. Follow me. Binance, all right? So at this point, have you subscribed to my channel? Have you done that? Please subscribe. Smash that subscribe button and turn on the notification bell. Do you understand? It's important. So please, and thank you for doing that. Now, next is we click on markets. We click on markets. We click on markets. And we click on futures. We click on futures, this one. Now at this point you may ask, what are we trying to do? Well, we are trying to add our pairs, our trading pairs to our favorite session. We are trying to add our trading pairs to the favorite session. Do you understand? So that whenever we want to do pair trading, we will need to start looking for them. Do you understand? So we have to make them our favorite. That's what we're trying to do right now. Do you understand? So you click on futures, you click on futures, you click on futures. Then let's say one of the pairs is BTC. Okay, I will just search for BTC, but I'm already seeing it. Please, you have to make sure you are on this USDM, not coin M, please. Not coin M, not options, please. Okay, you must make sure you are on USDM. Now, once you've ascertained that you are on USDM, then you just search for your pairs. Let's say one of my pairs is BTC. Okay, I'll just click on BTC USDT. I'll just click on it, and next I will click on this star icon. See this star icon at the top right hand side. Top right hand side. You see that star icon there? I will just click on it. When you click on it, it means you've added it to your favorite. So let me do that. Let me do that. So you can see I have added BTC USDT as one of my favorite. Okay, because I'm going to be needing it for my pair trading. So it happens to be one of the pairs, right? It happens to be one of the pairs. So as you can see the yellow, the star icon now is now yellow, right, in color. So that's how you do so. So if you want to add, let's say, let me just go back. Let's say Ethereum happens to be, you can see, as you can see here now, you see this BTC USDT now have that yellow, the star button now is yellow, right? But for Ethereum doesn't have it. So we'll do for Ethereum. So let's say Ethereum happens to be another pair that goes with BTC, just for the purpose of this video. Let's say Ethereum happens to be another pair that goes with BTC. Okay, we're doing pair trading. So all you do next is you click on Ethereum, or you search for the coin. It depends. Okay, it depends. You search for the coin. So when you click on Ethereum, you follow same process. Then the star icon at the top, you just tap on it to change to yellow. Do you understand? Just tap on it. So guys, as you can see, Ethereum 2 has been added as one of our favorite, because the yellow the star icon is now yellow, right? So it's been added. Let me go back. So this is how you go about adding your pairs. The pairs. This is how you go about adding them or making them your favorite. So now when we go back to favorite, this is favorite. This is favorite. Okay, this is favorite at the top. When we go back to favorite, just click on it. Then we click on futures. This one here, this futures, this one. When you click on it, under favorite, when you click on it, when you click on it, you will see that the Ethereum and the Bitcoin are there. Okay, so it means I successfully added both of them as my favorite. Okay, so I'm just using Ethereum and Bitcoin as case study. So it means Ethereum and Bitcoin are pairs that I use in pair trading. Do you understand? So let's make progress. Let's make progress. So let me show you how to trade. Though I won't trade, okay? I won't trade, but I will show you what to do or how to trade. Do you understand? But first, before we do that, let's activate our Bollinger Band and our RSI. Our Bollinger Band and our RSI. Let's get them activated. All right. So what you do now is to activate the Bollinger Band. To activate the Bollinger Band, just click on this BOLL at the bottom of your screen. See it here. BOLL. Can you see it? Just click on it. Once you click on it, it means you've activated it. Do you understand? So let me click on it. Can you see? So once you click on it, you will see these lines, this upper band, this middle average, okay? I mean moving average, okay? Then this is lower band. Do you understand? I thought about this before. So it means your Bollinger Band has been activated. Good. Now next is we have to activate our RSI. So how to do that is you click on it. This your RSI at the bottom of your screen. Can you see it? This RSI. So just click on it. Okay, so this is your RSI. This line, this yellow line you are seeing at the bottom, this yellow line you are seeing at the bottom is your RSI. Do you understand? So it means you've activated it. All right, so next let's click here first and just check out a few things. Click this icon, click on it, that icon at the top right hand side. Click on it, then click on indicator, this one at your left. Click on indicator. Okay, then do we have need for adjustment in Bollinger Band? Let's check out. You click on BOLL. Okay, 21.2. All right, it's okay. Go back. You click on RSI. This RSI. Click on it. All right, good. Uncheck that first one. This is RSI 1, RSI 1, RSI 2, RSI 3, okay? Uncheck that first RSI 1. Uncheck it. It's already showing yellow, right? Uncheck it. Good. Now, change this figure here. Just change it to, that's 6. Change it to 1. Okay? And leave it. Then for this, but you still have to uncheck it. All right. So, but for RSI 2, this one, for RSI 2, you have to check it. So turn it to yellow. Do you understand? So check that box, that tiny box there beside it. Just check it. All right, so you've activated it. Do you understand? You've activated it, and click on confirm. All right, good. So then just go back. So it means we deactivated RSI 1 and RSI 3. Do you understand? So we are working with RSI 2, the middle one. We are working with the middle one. The middle one. Do you understand? So let's try and change the color, because it's like I made a mistake, because the color here for the RSI was showing yellow before. Let me go and change it to yellow. Okay, let me just quickly do that. I think my hand mistakenly tapped on it. Let me just change the color to yellow and change this one to, say, blue. Okay, back. All right, good, we are back. So at this point, when I was showing us, when we started at the beginning, I was showing us how to, what uptrend and downtrend is. All right. So I said something like, if you watch this chart now, you will see that this is an uptrend. Okay, this is an uptrend. Please take note of something here. I want to say something very important. This is an uptrend, right? This is an uptrend, right? Uptrend, price shooting up. You understand? So in pair trading, when this pair, let's say ACH is one of the pairs we are working with for the purpose of this trading. Okay, if the price is shooting up, like in this ACH case, all right, what do? You short it. You take a short position. Short. You take a short position when the price is going up. When the price is going up, that is an uptrend. You take a short position. Do you understand? Then let's look at another case study. Let's use Dodge for example. So please let me recap. I said if the price is going up, all right, you short it. If the price is going, I mean for pair trading, we are talking on pair trading, right? So if the price is going up, you have two pairs now. You have ACH and Dodge. I'm just using those two pairs as an example, as a case study for this video, for this training. So for ACH, the price is shooting up, as you can see, right, from the chart. So if the price is going up, you short. All right. Then let's check out Dodge's charts. Let's check the chart for Dodge. Dodge. Okay. You see the chart for Dodge. Can you see it? You see the way it's sloping downwards. So this is a downtrend, right? You see the way the price slopes downward. This is a downtrend, right? For ACH, there was an uptrend. Price was shooting up. So for ACH, what do? When the price is shooting up like that, you short it. Then for the other pair, which in this case happens to be Dodge, what you do in this case is you long it. You long it. OLONG. You long it. You long Dodge while you short ACH. Do you understand? So you long Dodge while you short ACH. Now take note of the time frame. The time frame here is what? The time frame here is 1 hour. I'm using 1 hour time frame. If you took notice of ACH's chart, it was also 1 hour time frame. Do you understand? But you can choose to use 15 minutes time frame, which is this. It depends on you. All right, but I'm just using 1 hour time frame for the purpose of this video. Do you understand? And also don't forget to star it. Like you turn on you turn this star button, turn it to yellow. Do you understand? Yeah, I'm just using this video as an example. Do you understand? So if the price is going up, for let's say you have two pairs now, you found two pairs. One for the chart, all right. Let's say for coin A, the chart, all right. As when you look at the chart, the price is going up. It's an uptrend. You short it, okay. You take a short position. Now, if for coin B, like in the case of Dodge now, the chart, when you look at the chart, the price is going down. It's taking a downtrend, it's making a downtrend move. All right. In this case, you short it. I mean, you long it. You long it. Okay? You long it. So for uptrend, you short. For downtrend, you long. Do you understand? For uptrend, you short. For downtrend, you long. This is applicable in pair trading only. All right. So I've made a very valid point here, a very noteworthy point. All right. So let's now talk about RSI. You know. So how do you exactly know that, okay, it's time for me to enter this trade? Aside the fact that I have found two pairs in which one of them is making an uptrend move, while the other one is making a downtrend move. You know, I found two pairs in which one of them, when you look at the chart, is making an uptrend move, while for the other one is making a downtrend move. How do I how do I accurately tell that, okay, I am supposed to enter a trade now? How to know is the sixth, you look at the sixth point I gave earlier on, in which I said the range must not exceed 0.76. Okay, I said the range must not exceed 0.76. The pair range must not exceed 0.76. That's what I said, right? So you look at that range. Okay, you take note of the point number 6, which I said earlier on. Okay, now how do you come about that? You look at the RSI value. Now take note of the RSI value of Dodge. Look at it here. Let me show you. See it here. Look at the left hand side. Just follow the arrow. Follow the arrow. You see? So the RSI value of Dodge in this case now is what? 29.8. Let's just say 29.8. All right? 29.8. Now let's quickly go back. You have to be fast. Let's quickly go back to ACH, which is the other pair that I'm using. I'm just using it for the purpose of this training, please. ACH. You know, ACH is an uptrend. So in an uptrend, what do? You short it. Dodge was a downtrend, right? In a downtrend, what do? You long it. So ACH, let's look at the RSI for ACH. Look at it here. Look at it here. Just at the same position as Dodge. The RSI for ACH is what? Is 57.7. So what do you do at this point? You divide the smaller number by the bigger number. Okay? You divide the smaller number by the bigger number. Let's do that. Let's quickly do that calculation. What did I say? I said to get the pair range value, for you to arrive at the pair range value of the pair in question that you are looking at, you divide the smaller number, the smaller RSI, by the bigger RSI. So Dodge was 29.8, okay, divided by ACH was 57.7. So we got what? We got 0.51. If you like, in mathematics, you can call it 0.52 when you approximate to the nearest two decimal place. You can call it 0.52. So what was our point? What was our point in, when I was giving us those 7 points? The 6th point, I said something. I said the pair range value must not exceed 0.76. Do you understand? the pair range value must not exceed 0.7 Cs. Now, when we run our calculation for the two pairs we got, which is ACH and Dodge, all right, we discover that the RSI for Dodge is 29.8 and the RSI for ACH is 57.7, and at the end we got 0.52. Do you understand? Approximately we got 0.52. So 0.52 is less than 0.76, right? So it means this is a perfect opportunity for you to enter this trade. All right, this is a perfect opportunity for you to enter this trade. So it simply means there is a divergence. There's a divergence. So how do you tell there is a divergence? Because Dodge is taking a downtrend while ACH is taking an uptrend, like we saw in our Binance. Do you understand? Dodge took a downtrend, ACH took an uptrend. That's a divergence already. All right. So to further validate our point, we went further to run a calculation on their RSI to see what it is. So the RSI for Dodge is 29.8 as at that very point to place. You have to, because when doing it just a training. That's why I'm taking my time to explain. But when you are taking the trade, or when you are implementing the trade or the training, when you are implementing it in a live trade, you don't waste time. Do you understand? So for Dodge, we saw that the RSI value for Dodge is 29.8. All right. While the RSI value for ACH is 57.7. So and I now said, whatever pair you are looking at, divide the smaller value by the bigger value. So when we divided Dodge, which is 29.8, by ACH, which is 57.7, we got 0.52. All right. And our sixth point out of the 7 points I gave earlier on was that make sure that the pair range value that you got doesn't exceed 0.76. Now your question could be that your question would be, okay, what if it exceeds 0.76? If it exceeds 0.76, it is a no. It is simply telling you not to enter the trade. There's no signal. Do you understand? So, but if it is below 0.76, then there is a signal. So enter the trade. Do you understand? So in this case now, based on this calculation we just did, we got 0.51. So it's a perfect opportunity to take this trade. So what do? You go ahead and enter the trade. Like I said earlier on, let's go back to our Binance, please. This Binance, let us wait for it to load. My network is a bit poor, so let us wait. Exercise patience. All right, exercise patience. Make sure you've subscribed to this channel, guys. Have you subscribed? Have you? Please do that. It's kind of serve as an encouragement for us to keep publishing useful content. Do you understand? So make sure you subscribe to the channel. It's very, very, very important. Come on, what is wrong with my network? Anyway, let's not waste time because we're taking a lot of time. Okay, let me go back to the whiteboard and show you what I wanted to show you in this chart. But it's the same thing. All right, so let us go back to the whiteboard. All right, guys. So at this, we are on the whiteboard now. We are back to the whiteboard. So this is the uptrend. This is the uptrend, and that's for ACH, right? If you can still remember, ACH was the one making a downtrend. ACH was the one making an uptrend move. So this is the uptrend, all right, for ACH. All right. And the RSI for ACH as at that point was 57.7. All right. So 57.7 ACH. Then there was the second pair we are working with, that goes alongside with ACH is Doge, and Doge took a downtrend. As we saw in our Binance account, right, on the Doge chart as well as on the ACH chart. Okay, Doge took a downtrend. This is Doge. This Doge. I'm just using this illustration as if we are on the Binance chart, just to save us time. Do you understand? And Doge, the RSI value of Doge as at that point when we checked was 29.8. Okay, 29.8. So first of all, there's a divergence. Okay, there's a divergence. What do I mean by that? ACH is making an uptrend move. It's going up. It's taking its direction is upwards. While Doge is making a downtrend move. Its direction is downwards. That's point number one. Okay, that's point number one. There's a divergence already. Both of them are not going in the same direction, like I explained earlier on. Then, to further validate our point, we looked at their respective RSI. The RSI for ACH was 57.7 as at that point. The RSI for Doge was 29.8 as at that same point too. Alright, so we ran our calculation based on point number 6 that I gave earlier on, which is the pair range value must not exceed 0.76. So quickly we said for you to arrive at the pair range value calculation, you have to divide the smaller RSI by the bigger RSI. So the smaller RSI in our own case is Doge, which is 29.8. Okay, and the bigger RSI in the same case is ACH, which is 57.7. Do you understand? So we ran a calculation, 29.8 divided by 57.7, and we got 0.52. We got 0.52, right? And our sixth point said the pair range value must not exceed 0.76. So if it doesn't exceed 0.76, it means it's a perfect opportunity to enter the trade, or you have a perfect entry. Okay, I mean, that's a perfect signal to enter the trade where pair trading is concerned. Okay, regarding pair trading place, because we are deliberating on pair trading strategy. Do you understand? So 0.52 is a perfect pair range value. All right, so because 0.52 is not bigger than 0.76, it's lesser, so it's a good opportunity to enter the trade. So furthermore, I said how you enter the trade is you long let me take the next, let me open a fresh page. All right, guys, furthermore I said this is ACH, this is Doge, this Doge. So furthermore I said how you enter the trade is you short the one that is in an uptrend move, which in this case is ACH. All right, the one that the price is increasing is one you sell. To short means to sell. So the one you sell, which is to short, is the one that the price is increasing. The price is going up. The price is the trend line is in an uptrend. Do you understand? So is one you short. So you short ACH. All right. Then the one in a downtrend move or in a downward direction is the one you long, or is the one you take a long position. To long means to buy. So for Doge, you're long, okay, which is to buy. You buy Doge. Now, in either case, whether ACH or Doge, when you want to buy, that is for Doge, and when you want to sell, you are doing both of them at the same time. In fact, the difference, the difference in interval at which you do so should be very, very, very minimal, like few seconds to less than 1 minute. I mean, to 1 minute. You should be very fast, because you carry out both positional trades at the same time, simultaneously. Do you understand? So you use the same capital, like I explained earlier on, for ACH, and the same capital for Doge. So let's say you allocate $50 to ACH and you allocate $50 to Doge. That's point number one in the process of shorting and longing. Okay. Then secondly, you use the same leverage. So if you are using leverage of 2 for ACH, use the same leverage of 2 for Doge. Do you understand? Then for margin mode, you use isolated margin for ACH and also use the same isolated margin for Doge. Do you understand? Also, even before you arrive at this point, you are using the same time frame, which I recommended you use 1 hour time frame for both of them. Do you understand? That is before this point. You use 1 hour time frame. Make sure you're using the same time frame for both of them. If you're using 15 minutes time frame, use it for both of them. Do you understand? So those are the valid points I made. So if your trade now is live, I mean, okay, you've taken a short position, you've taken a long position in both, okay? Now, the trades are live, okay? They are no longer under open order. They are now live trades, right? So let's say ACH is already giving you plus, let's say ACH is already giving you plus, let's say plus 10% in profit, while Doge is already giving you, let's say, plus 3% in profit. You can close the trade at this point. You don't need to be greedy, please. You don't need to be greedy, and you don't need to leave your trades for so long. Just once you are okay with the profit you are seeing, close it. How do you close it? Click on the close position button below ACH. There's a close position button below ACH, which is a live trade, because both of them are now live trades, right? So you click on the close position below ACH and just confirm. After that, go back to Doge. Immediately click on the close position for Doge. All right. So by so doing, you've closed both trades. Now, if you don't want to do that individually, like separately, there's a button close all. There's one button close all in your Binance when the trade is live under futures. There's a button close all. Just click on close all. When you click on close all, both positions, both live trades will be closed. Do you understand? So just click on close all. Close all. If you don't want to close the trades individually, just click on close all. But if you want to close the trades individually, for the first one you click on close position and just confirm. For the second one you click on close position and just confirm. But if you want to close the trades simultaneously, just click on close all. All right, click on close all. So here are a few realities in pair trading strategy. A few realities in Binance pair trading strategy. You can make money from both pairs. Like in the example I just gave you. I said if ACH is already giving you plus 10% or plus whatever, then Doge is already giving you plus 3% or plus whatever. Both of them are in profit, right? Because there's a plus. You can close the trade. You've made money. Secondly, you can lose money in coin A while you gain in coin B. Now, in this case, coin A is ACH, coin B is Doge. All right. So you could lose money in ACH. Let's say your ACH is showing you minus 13%, while your Doge is showing you is showing you plus 51%. I'm just using all of these as case study, but these are the realities in pair trading strategy. All right, so your ACH is losing, which is minus 13%, while your Doge is making progress, which is plus 51%. At this point, you can close it. And how do you know your overall total? Your overall total is 51 minus 13. 51 minus 13. So when you do your maths, 51 minus 13 will give you around 30. 51 minus 13 will give you around 38, thereabouts, if I'm not mistaken. So it will give you around 38%. 51 minus 13, yeah. Yep. To give you around 38%. So your overall profit is 38%. 38%, right? That's your overall profit. That's second reality. You could lose money in coin A while you are making money in coin B. So your total profit will be the summation of both percentages. All right. So like in this case, ACH is minus 13%, Doge is plus 51%. So you subtract 13 from 51, you get 38%. So your profit is 38%. You didn't lose money actually, right? Now, the third reality in pair trading is that you may not make money in some, you may not make money, but this is a rare case. This is a rare case. You may not make money. How? An example is, let's say ACH, all right? ACH and Doge, both of them are live trades right now, right? So let's say ACH is giving you plus 70% in profit, while Doge is giving you minus 70% in loss. Or ACH is giving you plus 20% in profit, while Doge is giving you minus 20%. So both of them are 20-20, right? The only difference is one is in profit, the other one is in loss. All right, but the percentage is the same at that very instance. Okay, it's the same. So when you take a summation of both, 20-20, okay, plus 20% minus 20%, or plus 70% minus 70%, when you take a summation, you get 0. So it means you didn't lose money, you didn't gain money. Everything remained the same, right? So no loss, actually. Do you understand? So that's the third reality when it comes to implementing the pair trading strategy. Now the fourth reality in pair trading strategy is that, except in a very sudden, unpredictable condition, you will record total loss. You will lose big time like this. You will record loss. But this one is kind of sudden, unpredictable condition. Conditions like, after you've implemented the strategy and you now have a live trade, right? Let's say ACH and Doge now, for example, okay? They are running, okay? Then you now left your trade. You weren't monitoring your trade. You weren't watching over your trade. You just left it and maybe go do other things, or you went to sleep or something, okay? And you forgot you have a trade running. If something like, something unpredictable should happen in that condition, you will lose your money now. You will lose your money. You will make losses, okay? Because there could be a sharp reversal in the market that will cause you to record serious loss. Do you understand? So that is why you don't leave your trades. Once the trades are now live, the pairs are now live, okay? You watch them. And whenever it gets to that point where you are okay with the profit you are seeing, you close the trade immediately. Do you understand? So I hope you guys got the whole gist. And I hope you will go implement what you've just learned. Now let me give you a recap of just the gist of the whole thing I've said. I said, number one, you must enter both trades at the same time. Enter the trades at the same time. use the same market order for both pairs. I mean, use market order. You are not using limit order, please take note of that. For each of the pairs, you are not using limit order, you're using market order. Market order. You are not using limit order. You are using market order for both pairs. No matter the pairs you are using market order. I mean, you are using market order, not limit order. Also, I said you must use the same margin mode, and I recommended isolated. Don't use cross margin. Don't come and play smart. You must use isolated margin, okay, for both pairs, for both. Not that for ACH or for coin A, you are using isolated, for coin B, you are using cross margin. You don't do that. You will make a shipwreck. All right, so use the same margin mode, which is isolated. Isolated is preferable in this scenario, in this case, when it comes to pair trading. Do you understand? Then I also said you use the same leverage, and I said your leverage should range between 1 to 7. Although 6 and 7 are kind of risky, but you can use maybe 2x, 2x, 3x, 4x. Okay, don't use high leverage. If you use high leverage, I mean, you may blow up your account. So your leverage must be the same. So the leverage you apply for coin A or pair A must be the same leverage you apply for coin B or pair B. Do you understand? Use the same leverage. Then you use the same capital or the same amount. So if you're using, let's say you are using $10 for coin A, use the same $10 for coin B. So meaning you are spending a total of $20. I mean, you are allocating a total of $20 for the pair trading you are doing. Okay? Then I now said, for the 6th point, I said the pair range value must not exceed 0.76. I said the pair range value must not exceed 0.76. That's the 6th point I gave. And I gave a calculation on, and I gave you how to go about that calculation when you are doing, and when you are checking out the charts for whichever pairs you are looking at. I said you must divide the small RSI by the big RSI. So the small RSI at the top, the big RSI at the bottom, you do your division. Whatever you get, if it exceeds 0.76, it means you shouldn't enter the trade. Okay? You shouldn't enter the trade. Alright? Even if both pairs are going in different direction, in opposite direction, which means there is a divergence, you shouldn't enter the trade because your pair range value exceeds 0.76. all right, so now I said the 7th point is that you should use a time frame between 5 minutes, 15 minutes, or 1 hour, and I recommended 1 hour. I recommended 1 hour time frame. Okay, so with all of these points, put together, when you look at these whole points I've given together, I mean, you make very profitable trades. You will become a very profitable trader when it comes to pair trading strategy. All right. So I hope this whole content was useful. I hope you found it very, very useful and very, very informative. I hope this whole content is kind of eye-opening to you, in the cryptocurrency industry. I mean, especially when it comes to trading the crypto market, specifically the futures market. I hope it was useful. And thank you again, and thank you again, and thank you again for watching, for staying till the end. All right. Now, let me say this at this very point. Please, if you haven't subscribed, please do that. Just smash the subscribe button and turn on the notification bell. It serves as encouragement to us to keep dishing out useful content for your consumption. Okay, so please subscribe. All right, so thank you guys for staying tuned and staying to the end. I'll catch you guys again in the next video.